Let's see. All right. Good morning, guys. You guys can see my screen, yes? Just want to make sure. Can you guys see my screen? Can you guys see my screen? All right. All right. All right. All right. So let's just recap a little bit from yesterday's boot camp day 1. All right. Yesterday, what did we talk about? What did we talk about? Who knows? Who remembers? And if you weren't here yesterday, that's cool too. That's why we're doing this recap for you guys. All right. Yesterday's topic was market structure. All right. Yesterday's topic was market structure. So just a recap, just to see who was paying attention, who remembers. If we are in an uptrending market, what type of market structure should we see? If we are in an uptrending market, what type of market structure should we see? There we go, Erica. No, so we know that it is a bullish market, but what is the market structure going to be, Janelle? What are you going to see in the market? What kind of structure? All good. It's early. It's early. All right. There we go, guys. There we go. Higher highs and higher lows, right? This is our uptrending market. In this market, the structure that we will get will be our higher highs and our higher lows, right? Higher high, higher low, higher high, higher low. All right. So every time you get a higher low, pretty much you see that it is higher than the previous, meaning it's an uptrending market, right? So if I tell you that I am seeing lower highs and lower lows, what type of trending market are we in? If I tell you I see lower highs and lower lows, what type of market are we in? There we go. There we go. Okay, okay, okay. See, some people are awake this morning. Exactly. We're in a downtrending market, right? When you get lower highs and lower lows, right? That means you are in a downtrending market. The biggest indicator for that is the lower highs. Every time you get a lower high, right, prices going down. So we know that, we see that. And then what's that one part in the market that nobody ever really likes to trade? What do we call that? It's just a whole bunch of noise. Market's going sideways. What is that? When the market is going sideways. All right, consolidation. There we go. And through consolidation, they'll tell you, right, that we have equal highs and equal lows, but we know that really in consolidation, the market has already changed, right? We're already just waiting for the market to show us which way it wants to go. So that was the recap of day 1, right? Uptrending market, higher highs, higher lows. Consolidation, you'll have equal highs, right? Turns into a launch pad that will show you the direction of the market. Lower highs and lower lows, we've got a downtrending market, right? Cool, cool. All right, 10 hut. So that was day 1. If you didn't make it to day 1, go ahead and watch that recording. I believe it is up there. Right, we're gonna move on to day 2. Who's ready? Drop day 2 in the chats. Drop day 2 in the chats, because day 2 is gonna be lit. Day 2 is gonna be fun. This is where the money is made today. Day 2, yes sir. Drop day 2 in the chats. Yeah, let's see who's awake this morning. Awesome, 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 awesome. So for day 2, guys, what we are going to be talking about, right? We're going to be talking about impulse, right? Those impulse moves that we see in the market, the breakouts pretty much, right? We're going to be talking about retracements, right? Reversals, all of that in detail. I know yesterday we touched on reversals, how to identify them. But now we will go a little bit into detail of how to trade them, how to spot them a little bit easier, right? So yesterday I gave you guys a couple tips. What alphabet, right? What letters of the alphabet are we going to see in the reversals, right? What letters in the alphabet are present when we are looking for reversals? There we go. There we go. There we go. A's, V's, W's, and M's. Absolutely. Absolutely. right? These are going to be the reversal patterns in the market, A, V, W, and M, right? And today we will talk about them. Today we'll talk a little bit about why they create the way that they do. Why do we have price pull up, come back down, and then come back to these zones? We touched on it a little bit yesterday when I was going over, order blocks with you guys, but we'll go over that specifically today. And that's what will be the focus and the topic, right? Is how to catch those impulse moves. Well, we actually have a breakout strategy that catches those for us. So that one's kind of easy. How to better understand retracements, right? I know yesterday, the light bulb was clicking a little bit for us when we were talking about market structure and identifying those retracements, right? But today we will talk a little bit more in detail, why the retracements happen the way they do. I'm not going to touch on waves necessarily because I don't trade waves, but we will see the Elliott wave pattern form, right? As this is a pattern boot camp. So we will talk, a little bit about the Elliott wave, how that forms and why it forms. So yiggity, yeah, let's do it. Let's do it. Cool. Let me get to a nice point in the market where I see some impulse moves and breakouts. I mean, I could just use this same spot right here. Yeah, I'm actually going to. I'm going to use this spot right here. All right, and the reason why I'm going to use this spot right here is because I kind of have to touch on accumulation, manipulation, and distribution, which is the Wyckoff method in a sense, which I don't really trade like that anymore, but I cannot deny you guys the knowledge of accumulation, distribution, accumulation, manipulation, and then distribution, right? I have to explain that because they're patterns in the market as well. So does anybody happen to know what accumulation may be? Does anybody have an idea of what accumulation may be? You can take a guess. We haven't really talked about it in detail, so it's not going to be a wrong answer or anything like that, guys. Don't worry. I'm not docking this one off your homework at all. And grabbing of orders, the gathering of orders, accumulating orders. Absolutely. Absolutely. Right. So what is all of that though? What is the gathering of orders? What is accumulating orders? What is that? Right. I'm asking it this way and for a reason, that mind you. Sorry. Yeah, supply and demand. That is that. Not really the answer I'm looking for. Stacking positions, people placing trades. Nope. See, that's why I love breaking things down and making it super simple for you. Accumulation is consolidation. This is accumulation. That's it. Right? Can we agree that price is accumulating in this area, right? It is gathering orders in this area, just going up, going down, going up, going down, just gathering orders through this whole zone. Can we agree on that? If you understand that accumulation is consolidation, drop 3s in the chat. If you're still confused, drop a 2. All right, so mostly threes, right? So it's simple as that, guys. Accumulation is just the gathering of orders, absolutely. But to gather those orders, right, it has to consolidate. These are the orders that it's grabbing, is in this whole box, all through the top in here. Like, I just want you guys to visually think about legit there just being thousands of lines going across this whole box from the top to the bottom, whether it be a buy, a sell, buy entry, sell stop, buy stop, whatever it may be. The market is knocking out all of these orders. It is getting all of these people into the market, bringing them into the market, right? Accumulation has to gather some money before it can give you what it wants to do. Now, after accumulation, you get what is called manipulation, right? Now, the manipulation is also a gathering of orders, All right, it's the same thing. It's also a gathering of orders, right? So what do I mean by that? Let us drop back a little bit. All right, so this is where we are in the market. Just gonna throw, if you guys were to come into this market and see price right here, right now, what would you think to do? Would you be bullish? Would you be bearish? And just, there's no wrong answer, guys. We're doing this together again. All right, so I see some mixed answers, bullish, bearish. All right, I think you guys are trying to cheat. You guys are funny, right? I personally, right, I would be bullish. I would be bullish. If I came and saw the market right here in this area, I would be bullish. Why? First of all, for me, this is an inverted head and shoulders. All right. And this, again, this is an example. There is no wrong answer, but I'm breaking it down so you guys can understand what I'm going to teach. Also, yes, price is above the 50. Simple as that. Price is above the 50. And what is that? What type of market structure are we seeing right here? What type of market structure are we seeing? Just went over it yesterday. All right. No, so I know the trend. What type of market structure? There we go. Higher highs and higher lows. That's what, when I say market structure, guys, I'm looking for, what are you seeing? You seeing highs, you seeing lows, you seeing higher highs or higher lows? That's what I'm looking for when I'm asking that question. All right. So that alone is why I would say bullish, right? Now, the funny thing about the market is it never wants you to be right when you want to be right, right? It's just, the market just always decides to do whatever it wants to do, but it doesn't, right? It actually is doing something that is normal to the market cycle, right? It is called manipulation, right? Why does price manipulate in this way? Let's talk about it. From the low to the high, we have a gap, right? We have this void in the market. And we know that the market does not like these gaps, right? At all. The market does not like these gaps. We also know another thing, another pattern. Take note, because there's going to be a pattern that falls into a pattern, right? Manipulation, 9 times out of 10, will give you a turtle soup M or a turtle soup W. Right? Write that down. Manipulation, 9 times out of 10, will give you a turtle soup M or a turtle soup W. All right. Yesterday, we also talked about retracements, pullbacks, and things like that, and how market structure works. So, knowing this is a bullish trend, right? Knowing that eventually, from the low to the high, price will just have to retest. These are just things that we know in the market, right? But let's say we are before that 50% retracement, and we know it happens. This type of trading, right? Looking and identifying these patterns, you have to be patient, right? You have to let the market play out and do what it wants to do. Once you have identified your accumulation, and this doesn't change, guys. This is market cycle. Like, this happens on every pair. Happens on every pair. Right? Once you have your accumulation, you then will get your manipulation. Manipulation, right? All it is a pullback. All right. Why is it called manipulation, though? Let's just watch price play out. Because in a perfect world, right, price would come to this level and immediately reverse. But what does price do? All right, price breaks lower and will try to get the buyers out of the market. Right? It will try to get the buyers out of the market. knowing we already knew it was a bullish trend, that we knew, right? What manipulation is, right, is what we also call a fake out, a stop hunt, right? That's all manipulation is a stop hunt, all right? I want you guys to start identifying these on your chart, because this is also like, this is a way, like a way to trade, like people actually trade these moves. There's names for them. I'm not even gonna put the names on them like that because I don't want to confuse. So to make it easy, accumulation, manipulation, distribution, right? Just start identifying those three phases in the market and it will help you tremendously, right? Mark them up on your chart. What is turtle soup? To be honest, I would get out of a trade with a move like that, but we weren't ever in the trade though. We never entered the trade. We're just watching. That's what I'm trying to get you guys to understand, is you got to be patient. I wouldn't get in this trade right here because we know that the market gave us a low and it gave us a high. All right. It didn't give us a higher low, right? Which is okay. If, how do I want to say this too? I'm not even going to go that far yet. I'm not even going to go that far. I'm going to keep it right here. Keep it right here. We'll get there. All right. So the turtle soup M, Janelle, is the manipulation. All right. The turtle soup, in this case, the W, is the manipulation. Right. Why it's called turtle soup, I don't know. That's just the name that it was given in the trading world. But all turtle soup is it comes lower, right, than the previous low. That's it, or higher than the previous high. Right. But what have I always told you guys from day one? The fast move is what? The fast move is what? Right, there we go. The false move, right? Typically the move that happens the fastest is fake. It just is. I don't know why. Whenever you see big drops in the market right after news, you'll see drop, and then immediately price just revert. Not immediately, but over time, that mug just wants to reverse and you'll have a fat wick right there, a giant candle. All right. That's why this is happening, because of the manipulation. All right. We've got accumulation. Now we've got the manipulation. We are not trading this. We are not trading this. I don't care how many pips it falls. I don't give a dang. I don't care. We're not trading this. This is not the move we're looking for. Why? Because the market does one more thing. After the market accumulates, it then will manipulate, right? But this is also a form of accumulation. What was in this gap right here, right? What was in this gap, guys? What's up here? What was down here, I should say, right? What's down here? There we go, Denon. Right, orders. There was orders down here. There was a huge gap, right? Not even just orders. So let's say you have to think like this everywhere you go. Somebody's in the market at every point in time in the market. So if somebody was at this low and we see that this bullish move happened, what would be below here? If I bought the market here, what would be anywhere below in this zone? Does anybody know? There we go, Denon. All right, a stop loss. Stop losses. Take profits. Buy stops. I'm sorry, sell stops. Buy limits. All of that lies below the market. All of that lies above the market. Wherever there is a gap, there is always an order in the market that has to be filled. Always. So that's why when you see the accumulation, you know exactly, Daniel. No, we would not enter this market because we know and understand after accumulation must come the manipulation. It just has to happen. So we wait for the manipulation, right? And what kind of pattern do you think we're going to wait to see? What did we go over yesterday? What did we go over yesterday? Right? There we go. V's or W's, right? A reversal pattern. I said a BMW, yo. You're funny, man. You're funny. Right? We wait to see a reversal pattern. Right? So all of this, I'm teaching you guys this, right? The reason for this boot camp is to slow you guys down, right? To get you guys understanding the market structure so you're not just entering buys at the highs. Or if you do, you understand this is going to be your worst entry, right? That's what we're doing this for. Now that the manipulation has taken place, we wait for the market to show a reversal pattern. Right? What is this here? What did the market just give us? A V, right? The market just gave us a V. And what is a V? What type of pattern, what type of reversal pattern is that? What does that indicate? What does that indicate? If you see a V in the market, what type of market structure do you think is about to happen? There we go, Kiki. Right? A bullish reversal. Right? A V is a bullish reversal pattern. Do we understand the manipulation? Does that make a little bit more sense now? Do we understand that the market will literally come low to try and fake you out, turtle soup, right? Again, I don't know why it's turtle soup. I'll try and look it up. I'll try and do some research for us. I know some people like to know things. I'm that kind of person, but it just is what it is. Turtle soup is turtle soup, right? Right? These are the type of patterns I want you guys to start identifying. These are the type of patterns I want you guys to start looking for. So now that you have gotten the V pattern, right? Now that price is legit back at the levels that we started, we are then now moving into the third phase of this market structure, which is the distribution phase, right? Now, the cool thing about distribution is, what do I tell you guys about the 1%? When they lose money, what do they like to do? I don't know if I've ever said it on this. I mean, I said it a couple times. When the 1% loses money, what do they like to do? What do they like to do? I get it back. But what do I say more than just get it back? They don't just get it back. What do? All right. What do? They double up. Exactly, right? They double up. Collect with interest. Exactly, Brian. They double up. Right? The distribution phase is what I like to call the double up phase. Right? What do I mean by that? I mean, you can legit take a box and measure from the top of the manipulation to the bottom of the manipulation and clone said box, right? Now, what I like to do is what I do, right? To identify where we're going to go. My distribution box, the bottom of my box, right, would go with the top of my manipulation box or the top of our accumulation, right? We're using this structure because what you're going to see is price will A, come back to where it started, and B, double up. That's legit what I mean. I mean, price is going to double. That's just what happens in the distribution phase. We have collected our orders. We have accumulated orders in the market. We have manipulated said orders in the market to scare the buyers out, to get all of their money, to snatch up them dollars, to then distribute price into the true direction that we wanted to go. All right, so to enter in this phase, what do you think we're gonna do? When in doubt, what do we do? When in doubt, fib it out, right? Now that the market has given you the low, now that the market has presented a swing high, right? In this case, to find your entry, you fib it out from the low of the manipulation to the swing high of the pullback, right? Where do you think we're going to enter the market? At what level do we look to enter the market? All right, the 50, our golden zone. All right. Anywhere between the 50 and the 62%. All right, this is where we are looking to enter the market. Just because the market presents a reversal pattern does not mean you enter the market at that moment. You have to wait for the market to show you that it truly wants to go in that direction. Right? We get the reversal pattern and we wait for the retracement of said pattern. Right? Because while the V shows us the immediate reversal, there's another pattern, right? What's that other bullish pattern that we see that tends to happen? All right, a W. A V on a higher time frames could be a W on a lower time frame. Yes, absolutely. Absolutely. It absolutely can. Because this V here is a W on a lower time frame just because of this double bottom right there. But yes, James, absolutely. All right. So now that we have waited for the accumulation and the manipulation, we're just waiting to enter on the distribution. All right. So let's see. So the market doesn't actually give us the 50%, but we see what we're trying to say, right? The market does fairly pull back at least 50%. All right. This is where we are entering the market. We would have entered the market here. If it retraces anywhere within this zone, in this vicinity, pull the trigger. Does the W start at the top of the V or the second high? Does the W start at the top of the V or the second high? I'm trying to understand that question. I guess if you get a V, you don't have a W, right? So simply put, if there's a V, it's honestly not a W. The only way it's a W is if it comes back down to the low. Does that make sense? So no, it wouldn't be a W at the top of the V. It would be a W if price comes and pulls back to the low. I mean, there is a W created after the V, right? Not always. Not always, not necessarily. So that's why I don't want you to, don't think like that. Don't think because this happens, that happens. That is never going to work in the market. If that was the case, we'd all be rich. If the market dipped and it bought right after, that would be the easiest strategy and everybody would be so fire at trading. But it doesn't work like that. So you can't marry it. You can't think, okay, because I saw a V, I'm going to get a W. No, you have to watch and identify, is it a V or is it a W? Right. And that's why we're also doing this boot camp, is because you see the market will do something different every time. It's not ever going to be the same way every time. What will be the same is the accumulation, the manipulation, and the distribution, but the reversal pattern is not always going to be the same. No. So that is why I'm teaching you guys to identify the reversal patterns, because no, there won't always be a W right after the V, if that makes sense. I hope that answered the question. Cool. What does a W look like? Is that a trick question? That was a trick question. Okay. I was just, is that a trick question? Are you serious? I'm just trying to make sure. I'm just trying to make sure. Is that a real question? That's a real question. Okay. A W is exactly that. It's a W. I mean, that's a W. Right? That it literally will look like the alphabet. Literally looks like the alphabet. Right? That's the bigger picture W. Right? There's always W's and V's inside of whatever, but I always just like to focus on the bigger picture. You have to really study this to identify it. Yes. Well, I didn't get to the point where it finishes yet, so you kind of were ahead of me. So, but no worries. Now we know what's gonna happen. All right. After the manipulation comes the distribution. Right? Comes the distribution. If this was our entry point in the market, price has never retraced, right? Let me just show you visually. And again, my TP is a measured move. We know we're about to go double up. I'm pretty sure you guys know what happens after this, because this was the chart we studied yesterday. All right, now we're in the distribution phase. Now we are in the distribution phase. So from this dip, price is we already break even. Whoever bought right here already has their money back, right? They're now no longer really in the negative. They're chilling. We know what happens, right? We'll just look at it. You see price start to show you structure, right? Even way before we got into this little channel. What did price give us? What did it create here? What did the manipulation create? What is this? What is this? All right, there we go. There we go, Daniel. It's a low. What is this? If this is a low, what is this here? What's this here? All right, there we go, Daniel. It's not just a low. It's a higher low. All right. What is this? So do we see how literally just market structure and knowing a few letters of the alphabet can make you a lot of money? Do we see that now? Do we understand how yesterday understanding market structure will help you in visualizing now that we know this manipulation, accumulation, manipulation, distribution? Right? A few letters of the alphabet, I'm telling you. You don't even have to know the whole alphabet to make money nowadays. It's cool. It's a great thing. It's a beautiful thing. Right? You don't even have to know the whole alphabet, Daniel. Exactly. It's overrated. Right? It's overrated. Right? But does this make sense? Right? Is this making sense? Because we're still, let me get rid of this. Let me see. Right? In the accumulation phase. There's not really a timetable as to when it happens or how long it takes. But what we do know is that it happens. And whenever price starts to distribute, we know we're going to double up every time. Every time. That is what this whole manipulation was for, was to accumulate the orders that were needed to distribute to the masses. I believe price comes here. But do we get the picture though? Do we see how the manipulation happened? And technically, I mean, it's still doubled up from here to here. And then depending on the size of that box, that's probably going to take it into there. But does that make sense? The accumulation, manipulation, and distribution? All right, is anybody confused in any of that? And this happens on all time frames? Absolutely, sir. It has to happen on every time frame. These are three things that will never not happen in the market. You will never not see accumulation. You will never not see manipulation. You'll always see distribution, right? These are three phases that have to happen in the market. Just have to. Let's see. I'm gonna get up to there. Just gonna consolidate. And then that goes into there. So today's focus is knowing how to identify, being okay identifying accumulation. Understanding that when you see this hard, fast pullback, this is legit just manipulation. It is trying to get you, trying to scare you out of the market, right? When you see the manipulation, understand that you are now waiting to enter on the distribution, right? You're just waiting for all this accumulation and the manipulation to pay you, pretty much, right? That's all we're waiting for. We know that the market has to give us at least 50%. We know that the market presents and shows these patterns, right? I showed you the W within, and they all look different, right? Because here's this is a W. right? That's a W. It's just a matter of how you look at it, how you see it. All right. I showed you the one inside here. All right. That's a W. There's an even smaller one that Glow was talking about. And I mean super small. Right here. All right. It's not going to be easy to see them with the naked eye. You have to be back testing. You have to be looking at the charts enough that you can see every letter in the alphabet that is needed, right? What is this? Right? That's an A. This is an A. This is an A. This is an A. So many. So many. Here's a V. There's a W in there. There's a V. There's another V. There's a W, right? So it's just a matter of just looking at the chart and knowing, okay, what does this look like? Now you'll never know unless you mark them up, guys. That's the other thing too. You can't just look at it and say, oh, I think I see that. No, put some lines on a chart. Actually visualize it. Make it so that way you can see it. All right, not just think that you see it, but confirm what you are seeing. I'm telling you guys, in the beginning, my charts legit look like this. They still do, honestly. They still do, right? They still look like this. Because there's nothing wrong with identifying what you see. You legit train your eyes. So distribution equals higher highs and higher lows, or lower highs and lower lows. That is absolutely correct. Yes, sir. Yes, sir. All right. Through distribution, you will see the market structure. All right, let me see. Am I missing anything? Breakouts, pullbacks, fake outs, stop hunts, entry and exits. Yeah. Okay. Yep. All right. So one thing I can add, yeah, you guys are firing with this agenda, Glow, for real. You guys are fired with this, right? One thing I do want to add, if you are somebody who likes moving averages, somebody who's gotten used to them, they can also be used as your confluence, right? If you see, right, your moving averages just flat. The thing about the move, how do I want to explain this? Because the moving averages won't show you what the market wants to do until after the market does it sometimes. That's the one thing I do notice. So if you are going to use them, please understand all of these other tactics, right? Please understand the manipulation, because that might, freak you out and tell you, okay, well, I'm not going to be looking for buys when you should be looking for this very point. But I mean, even then, the moving average is going to tell you if price is going to dump, it's going to dump. Just wait for it, right? Just be patient. I'm actually going to get it to where we don't even have to trade with moving averages because it's hard to tell you about price action and then tell you to look at a moving average that doesn't move until price action happens. So it's kind of like bittersweet sometimes. I love them. Like I love the moving averages and what they do and what they show us. But sometimes it's like after the fact that we use it for confluence 9 times out of 10. So yeah, I believe That is a good place to leave it off right there. I'm glad you said that. Yeah. Wait, you talking about the moving averages? Yeah, what's up, Pat? What's your question? Drink some water, guys. Drink some water. Here, let me see. So moving averages tell you where the market is going or where it's been. Depending on the moving average, 9 times out of 10, it's telling you where it has been. Because of what a moving average just is, just in the name, it is an average of what's moving. So what that means is for it to be where it is, it had to use past data to be where it is. Does that make sense? Meaning it's never going to be ahead of what price is doing. It's always going to be behind, always, just based on the science of how the moving average works. It needs the movement to then give you that average. I hope that was a good answer. I hope that made sense. Exactly. It's an average based on what happened before. Like the 50. It's an average of 50 moving candles, right? But it only can get that average after the 50 candles have moved. They can't tell you what the next 50 candles are going to do in a sense, if that makes sense, right? They all lag, exactly. They all lag. Golden cross, death cross, mustard, ketchup. Again, they all lag. They all lag. That golden cross is showing you after the movement has happened. It's not showing you before. There is not a magic way for moving average. I'm telling you guys, if there was, we'd all be rich, y'all. We'd be rich already if it was that easy, but it's not. It's not. But you can train your eyes. I just told you guys how to look at everything without even needing a moving average. I just told you guys what exact letters in the alphabet you're going to look at every time and see. I just told you guys the 3 market phases that happen every time, no doubt, right? Those are the indicators, guys. Like, you will have to become the indicator. We can't keep depending on these moving averages. They are wrong most of the time. Why? Because it's the past. Literally, it's not showing you anything in the future. They're behind. They're wrong. They work. Don't get me wrong. They work, but they're not showing you anything that you can't find yourself. I promise you. I promise you. All this moving average just did was move sideways. But we know price is moving sideways. We can see that. All right. So I'm trying to get you guys to visually see these things without needing the moving average. Because again, moving averages are just that, an average of what's going on. But the same things don't happen every time. So they don't always look the same. But what does look the same? M's, V's, W's, and A's. That's what looks the same all the time, always. That will always look the same. Not the same, but you'll always see a V. You'll always see an M. You'll always see an A. You'll always see a W. These things are always going to be there, right? Always. I mean, like, this is a side note, right? Moving averages patterns tell us more than moving averages. Absolutely. Absolutely, James. Patterns tell us way more than the moving average. And that's why we got this boot camp. That's what the boot camp is for, right? Let me see. Any other questions? These are some good questions, guys. These are some good questions. I think we're getting somewhere today. I think some progress is being made today. Any other questions? We good? Do we now understand, right? What's consolidation? What do we call that? What are we now going to call that? What is consolidating? What is price doing when it's consolidating? What is it doing? What is it doing? All right. There we go. It's accumulating, right? What comes after accumulation? What is price going to then do? Right. And why does price manipulate? What is it doing? There we go. There we go, Christina. There we go, Denon. There we go, Glow. Yep. Grabbing orders, right? Stop hunts. Collecting orders. Stop hunts, right? Ever had a buy limit right here and then your your stop loss just gets smacked? That's why, right? That's exactly why. Stop hunts, right? And then what happens? When price then manipulates, what is it manipulating to do? There we go. Distribute to the masses. I like that. Who said who said that? There we go, James. I like that, right? Distribute to the masses. Exactly, Pat. We get paid, but we get paid, man. That's it. That's guys, exactly. We double up, right? It's this simple, right? It's simple. It's not easy, right? The definition of simple, I don't know exactly. But what I do know is that it's something that is easy to be performed, but the task at hand, right, come with a little bit of complications, right? So what is simple is not easy, right? It's simple, just understanding accumulation, manipulation, distribution, right? It's simple to understand, but it's not easy. It does take some training. It does take some time, right? And that's why exactly we got the wonderful Glow and amazing Delvani, because now you guys can understand what the hell Delvani's talking about, right? You guys now know what he's telling you guys when he's talking about these phases, right? When he's talking about these order blocks and turtle soup, because I know Delvani trades those, right? You now understand why price did the turtle soup, because it had to go through the manipulation phase. We now understand why price doubles up in the way that it does, because we're in the distribution phase, right? Understanding these little things make a huge change, a huge difference in learning, because now you'll start to see things that you did not know before, right? You'll start to identify all of the A's, all of the W's, right? They're everywhere, guys. They're everywhere, everywhere, everywhere in the market. All right. Let me see. I believe that's a good spot to end day 2. And then we'll go into day 3 tomorrow. I believe the way that it's broken down, I'm gonna stretch this into 2 weeks, because there's like little things that I want to touch on. But I want to give you guys as much time with all of this information as we can. So this boot camp probably go about 2 weeks. Think about 2 weeks for this. Man, again, shout out to, this was all Glenda, all Glow, all Tanya. This was all them. Shout out to them. They saw what was needed, and so we're just getting to it. We're just getting to it, and this was the best time to do it. Janelle, this is gonna be more than 3 days. It's about a 2-week boot camp, I believe. That I'm gonna stretch this out to a 2-week boot camp. It'll be 2 weeks. Take us into January. That's what I'm gonna do. I'm gonna take us into January with the boot camp. 7 a.m. 7 a.m. Yes, not 7:20. I'm gonna get up earlier now because I know my computer will do that for me. So 7 a.m. Perfect timing while school is out. Exactly. Yeah, 7-ish, right? Right, James? 7-ish, we'll say that. Right? Exactly. January will be eating up them FTMOs, guys. Man, that's still the goal. I have not forgotten what I told you guys we're gonna accomplish. Everything will get accomplished. That's why I'm excited. 2022, guys, I've got a full 12 months with you all. Granted, you're here, but I got a full year with you guys. If you think we did some great things in this last, 6 months, maybe? Imagine what happens when we got a full trading year. No summertime, none of that, right? It's gonna be exciting, guys. It's gonna be super exciting. I'm super excited to be with you guys at the beginning of the year. 2022 has some great things in store for us. I believe everyone here is going to accomplish more than what they thought they were going to be able to do next year. Just stay close, guys. Stay close. And even if we do have people who fall away, That's okay. They'll be back, and we love them the same. People, you know what I'm saying? Like we keep everybody in our thoughts. Anybody who's not getting this sauce, I do say sorry for your loss, but nah, I keep you in my thoughts still too. Right? Breaking generational curses and creating generational wealth. Absolutely, absolutely. I'm about to go get MCA tatted on me this week, man. No, probably next week. Before the new year, I'll probably do that. But yeah, guys, that is everything for day 2. Stay close. Watch day 1 again if you did not. Watch day 2 again if you were here. I'm about to go watch them too, so I can know what to give you guys the next time. But other than that, man, have a great day. Right? Stay happy, stay healthy, stay hydrated, and I will talk to you guys in the chat. So I'll see you guys later. Peace.